Now let us solve a problem on different types of ratios. So from the following details, calculate return on investment. So they have given the information regarding equity share capital, preference share capital, reserve, that is general reserve, 10% debentures, current liabilities, discount on shares, fixed assets, and current assets. Then they are telling us to also calculate return on shareholders fund, EPS, book value per share, and P or E ratio if the market price of the share is 34 and the net profit after tax is 1,50,000 and the tax had amounted to rupees 50,000. So here we have to calculate 5 ratios, that is return on investment, return on shareholders fund, EPS, that is earning per share, then book value per share, and P or E, that is price earning ratio. First, let us find out the return on investment. Now, what is the formula of return on investment? So, return on investment is equal to profit before interest and tax divided by capital employed into 100. So here we don't know what is profit before interest and tax, and neither we know what is capital employed. So let us find it. First, let us find out profit before interest and tax. Profit before interest and tax is equal to net profit after tax plus debenture interest plus tax. Now let us write the values. So for net profit after tax, in the question they have given net profit after tax was 1,50,000. So 1,50,000 plus debenture interest. They have given the debenture value as 4 lakh and debentures are of 10%. So it will be 10% on 4 lakh. So 4 lakh into 10 by 100 will give you 40,000 and this is the debenture interest. Okay. So debenture interest is 40,000 plus tax. In the question, they had said tax had amounted to 50,000. So tax is 50,000. So 1,50,000 plus 40,000 is 1,90,000 plus 50,000 is 2,40,000. So we have got profit before interest and tax, that is 2,40,000. We have got profit before interest and tax. Now let us find out capital employed. So formula of capital employed is huge. So equity share capital plus preference share capital plus reserve plus debentures minus discount on shares. Now let us write the values corresponding to them. First is equity share capital. So equity share capital is 4 lakh. So 4 lakh plus preference share capital is 1 lakh plus reserves is 1,89,000 plus debenture is 4 lakh minus discount on shares is 5,000. Now calculate. 4 lakh plus 1 lakh plus 1,89,000 plus 4 lakh will give you 10,89,000 minus 5,000 will give you 10,84,000. So we have got capital employed, that is 10,84,000. Now let us substitute these both values in the formula of return on investment, that is profit before interest and tax divided by capital employed into 100. So what is profit before interest and tax? It is 2,40,000. 2,40,000 divided by capital employed is 10,84,000 into 100 is 22.14. Since it is a profitability ratio, we will put percentage at the end. So we have got the value of return on investment. Okay. So we are done with return on investment. Now let us calculate return on shareholders fund. What is the formula? Return on shareholders fund. Formula is profit after tax divided by shareholders fund into 100. We know what is profit after tax. It's given in the question. We don't know what is shareholders fund. Let us find that. So shareholders fund is equal to capital employed minus equity share capital. Now, what is the capital employed? In the question, there is no capital employed, but we have found in the previous ratio, that is return on investment, about capital ratio, and we got 10,84,000. So this is the capital employed. So 10,84,000. And what is equity share capital? Equity share capital is 4 lakh. 4 lakh. So what is the shareholders fund now? 10,84,000 minus 4 lakh will give you 6,84,000. So we have got the shareholders fund, that is 6,84,000. Now let us substitute in the formula. So formula is profit after tax divided by shareholders fund into 100. Now what is profit after tax? It's given in the question. Profit after tax is 1,50,000. So 1,50,000 divided by shareholders fund is 6,84,000. So 6,84,000 into 100. So what you will get? 1,50,000 divided by 6,84,000 into 100 will get you 21.92. Since it is a profitability ratio, we will put the percentage here. So our answer is 21.92% of return on shareholders fund. We have found return on shareholders fund. Now let's move on to the next ratio, that is earning per share. Okay. Now what is the formula of earning per share? Earning per share, or we can call as EPS. The formula is profit available for equity shareholders is divided by number of equity shares. We don't know what is profit available for equity shareholders. So let us find out that first. Profit available to equity shareholders is equals to profit after tax minus preference dividend. Dividend in the sense interest for preference. Okay. Now what is profit after tax, profit after tax is 1,50,000. So 1,50,000 is profit after tax. Now what is preference dividend or preference interest? So our preference share is 1 lakh rupees. So our preference share is 1 lakh. It is 12% preference share. So they'll get 12% dividend. So 1 lakh into 12 by 100 is 12,000. So this is the preference dividend. So write it minus 12,000. So 1,50,000 minus 12,000 will give you 1,38,000. So we got profit available to equity shareholders, that is 1,38,000. Now, what is number of equity shares? In the question, they have said that equity share capital is 4 lakh, but each share value is rupees 10. So now how do we calculate number of equity shares? Number of equity shares. So equity share capital divided by share price. So what is equity share capital here? It's 4 lakh rupees. 4 lakh. What is share price? It is rupees 10. So 4 lakh by 10, 40,000. So this is the number of equity shares. Now let us substitute this in the formula. First is profit available for equity shareholders, that is 1,38,000 divided by number of equity shares, that is 40,000. Here we will not write percentage, that is 100, because it is earning per share. Here we are not finding any profit or any sales. Okay, so here we don't use 100. We are not multiplying it 100. So 1,38,000 divided by 40,000 is 3.45. So this is earning per share. So we have done earning per share. Now let us calculate book value per share. Now what is the formula of book value per share? Formula is equity shareholders fund divided by number of equity shares. Now, what is equity shareholders fund? So, equity shareholders fund formula is equity shareholders fund is equal to shareholders fund minus preference share capital. Now, what is shareholders fund? Let's check. Here, nothing is mentioned about shareholders fund. But you remember on return on investment, we have calculated shareholders fund, and the amount we got for shareholders fund was 6,84,000. So we will consider this. So 6,84,000 minus preference share capital is 1 lakh. So we will get 5,84,000. So we got equity shareholders fund, that is 5,84,000. Number of equity shares 40,000, the number of equity shares. So now let us substitute 5,84,000 divided by 40,000, 14.6. So this is the book value per share. Now we have to calculate the last ratio, that is P or E ratio, that is price earning ratio. What is the formula of price earning ratio? Price earning ratio is equal to market price of the share divided by earning per share, that is EPS. So in the question they have given market price of the share. Yes, yeah. Market price of the share is 34. So market price is 34. Then earning per share, we have calculated EPS now. That answer you take it. So yeah, we calculated earning per share and we got the amount as 3.45. So 34 divided by 3.45. 9.855. So this is the price earning ratio. So these type of questions are basically asked for 12 marks in the examination. Okay.
Thank you guys for watching the video. Do like the video if it was helpful for you and subscribe to the channel for upcoming updates.